So we've got business telling its story through financial statements. What are the financial statements? The statement of position, the statement of change, and then we'll talk about these later. So we're focusing on two main statements. The statement of position that tells you where you started and where you are. You are here. And then the change is, hey, the amount that this changed, how much of that as the owner, how much did your ownership, how much did what you own or what you benefit from increase? That's basically what the financial statements are telling you. Your position and your direction. And you use those to predict the future. Or make judgments as a stakeholder. Okay, so what we decided before was that we needed to, in order to go forward, so understanding the financial statements, the next milestone is you must understand this picture. And I wrote myself some breadcrumbs saying, in order to understand this picture, the accounting framework model, the AFM, you must understand owners versus creditors, asset values, and then the idea of balancing. So let's go into those. So let's say owners versus creditors. All right, so I've got a picture from before that I had created for this. And it looks like, sorry. It looks like in order to explain this picture, we've got to describe assets. So let's go back. Let's change this order. All right. So let's kind of do flow of consciousness here. So we described as a business or an organization is some boundary around resources. So how did I describe that? I wrote a line somewhere. Was that a different chapter? So resources are organized for a purpose. So resources organized for a purpose. So let's say we've got these resources. They're organized for a purpose. And each organization has owners or stakeholders. So the reason this came up is we were talking about it in the context of you can have for-profit, not-for-profit, and a government. And then we described, so I had this slide where we said an organization organizes resources for some outcome. It can be for profit, not for profit, or government, and there's management. So so we've got assets, which is what the resources that are organized. You've got you've got an organization. You've got the assets. My bad. You got the organization, assets, management, and then the owners. And then let's say also stakeholders. Other stakeholders. So when how do I want to organize this? So let's say organization with assets, and then you've got owners, management. So what an owner is, what's one of the rules of this game is that if the bubble popped, or if this organization was going to liquidate, all of the assets go to the owners. Unless there are creditors. So I kind of want to hold up. I'm gonna do this on a whiteboard so that I can move stuff around as I change my mind. I'm trying to synthesize everything we've talked about up till now into a graphic that we can build off of. All right, so it starts with the organization of assets. And the idea of stakeholders. So these owners, potential owners, the public, or government regulators, let's call it creditors or potential creditors. All right. This whole picture is about explaining to them the story, but I want to be able to work into here the idea that an owner puts resources into an organization, and then a creditor also puts resources into an organization, and then it doesn't matter where they came from. But the rules are, it matters what order they come out. So if those assets, so first, second, going in, but if they were going to come out, they're going to go first to the creditor and second to the owner. So this picture right here, we need to somehow represent like the inflow and outflow. So let me draw it again, but showing kind of how do we want to represent like an a valve in. So we've got this box, and we've got the entrance. You've got owner, and then you've got creditor, they go in first. They go in second. But then when it comes out, first, second. Okay. I want some picture like this, but I want it to be turned on its side. So let's comes in here first. It comes in here second. That comes out of here first and out of here second. First. So this is the creditor owner. So how can we demonstrate this game where it's, all right, creditor's not going to go putting anything in until the owner does, and the creditor gets theirs out first before the owner. And we want to show kind of this layer of abstraction. So owners, creditors have stuff. I'm going to put mine in first. And then you get yours out first. I don't know. Nothing's coming to mind right now on how to synthesize this, so it'll just become a memorize the rules thing. Owners, creditors. Whenever an owner, oh, here. Okay, we're going to start creditors. We're going to put hats on. All right. So every time an owner puts assets in, they get a score. They get put on the scoreboard. Then, whenever creditors put assets in, they get score on the scoreboard. Then the rules of the game are that whoever let's add another person here. It's a manager. The manager takes those assets and uses them for their purpose and tries to grow them. And what happens is the creditors get theirs first. So when they get theirs back, then those go away. Let me show it different. Those go away when they get theirs back. And the amount that the owner gets is that many. They get 9. So the rules of the game here are creditor gets theirs first, but only theirs. Owner gets everything left over. So what we're trying to illustrate here is this game of creditors go first, but they only get what's on their scorecard. So let me get back to what I'm trying to, what we're doing right now is trying to teach this picture. And in order to teach this picture, we've got to somehow convey the idea of assets, owners, and creditors in the order of claim, and then how the scorecard works. So let's go back and let's do this again. So we're going to tell a story that illustrates this concept. So I'm going to try it again. Hold up. I'm going to see if I can... Ooh, I don't want that. I want to copy that. Cool. Now I'm going to redraw this. Okay, rehearsal number 2. And then I've got to go. So, first, somebody decides that they're going to organize resources into an organization. So, this is the owner. The organization has a scorecard. We're going to call it the claim scorecard. And every time the owner puts assets into the organization, they get a point on the scorecard. Then a creditor or a lender, they have their assets come on. My goodness, come on. They put their assets into an organization and get on the scoreboard. So there's 8 units of assets. And the scorecard reflects who gets those assets if they were taken out of the organization. And the rules are, if any of these assets come out of the organization, they go in order of the scorecard. So the priority claim. All right, now you've got somebody, a manager inside the organization, whose job it is to take those assets and turn them into more assets. So let's say that there's 3 more assets added. You pretend like these are seeds, and you put them in the ground and they grow more assets. So now there are 10 assets. Well, there was 8 assets, but now there's 10 assets. Over on the scorecard, we need to reflect who would get those new assets. So these 2 new assets, who would get them? Well, the rules are all the assets would go in order of the scorecard. The creditor, so I need to have the creditor would get 5, the owner would get the rest. Creditors first, but limited to whatever's on their scorecard. The owner second, but gets the rest. So those 2 new ones would go to the owner. So there was 8, now there's 10, and all 10 are reflected on the scorecard. So if the owner wanted, they could take these 5 right here and give them to the creditor. Give them back to the creditor, in which case the scorecard gets updated to show that they're not owed anything anymore. So then the owner if they wanted to take one, come on. This could be given to the owner, in which case, we would remove one from the scorecard. So the owner has 4, and that's how many there are. Okay. I like this. So the goal here is we need to be able to explain this picture, and that's what we're basically drawing right now. If you like what we're doing here is these are assets, these are liabilities, and this is equity. That's the scorecard on the right and assets on the left. All right. I have to leave, but I wanted to think through that, so we will continue.